Hey everyone, I hope you're having a great day. It's time for another market update. Today is Thursday, January 12th, and it's about 12:45 on the West Coast. And thankfully, I can tell you guys it's been a great week since I did my last video. Last week, the average conventional when we spoke was, according to that lender survey, was about 6.5% nationwide, and today we sit at 6.07%. So a nice drop, almost a full half a point. And really, that started on Friday when, as I mentioned last week, we were going to be getting really important the BLS job numbers. And at first glance, when I first saw the report in the morning, I was worried. I thought it was going to be a bad day for mortgage rates. But when you took a closer look at the report, which we always say you should do, you could see that the job growth was all in second work or second jobs and part-time work. And then the other positive that the markets really loved was that the wage growth slowed down. So wage growth can be inflationary. The more money people have to spend, the more money they might spend, driving up the cost of goods and so forth. So showing that wage growth slowed down, the markets really like that, and that is where the rally started. And that continued into this week, into today, where we got a new CPI inflation data for the month of December. So this is graph as going back when we got the stuff for November. So this 6.0 number for the core, which strips out the energy and food costs, that dropped to 5.7%, which was this 0.6 became 0.3. And things to be, as we talked about before, things seem to be on a nice trajectory downwards. With this inflation coming under control. And one thing we can be a little bit more optimistic about, a lot of this growth that was still going on had to do with shelter. And as we've talked about, shelter's lagging. So even just looking at rent costs, we can see that, rent is coming down according to Apartment List, whereas the CPI rent is at 7.9% as of this chart. Now this is at 8.3. So it's even more, inverting even more where the actual rental costs are coming down, and what the CPI is showing is going even further up. And this would give you a better idea. We're basically at the highest point since 1985 on shelter. So way up here at the top. And, let me know if this makes sense to you guys. We have housing prices are down, about 0.5% month over month. Rental prices are down about 0.8% month over month. But somehow shelter is showing up 0.8 month over month. And like I said, that has to do with this being a super laggy indicator, but it gives us hope that once this does turn around and actually starts showing us what it should, that will make these inflation numbers come down even faster. So really, looking to the future, going back to this one real quick, May is a good, if once we get through these April numbers, that might be the point where we really start seeing rates start to drop. But like I said, we're at 6.07 now. So we're getting closer to that 5 number, which, for lots of reasons would be, great for all of us. So, things are going in the right direction. But like we talked about before, I don't think it'll be a complete straight line down. We're not going to go down to the low 3s anytime soon. If we can just find ourselves in the lower part of the 5s here in 2023, that should make a lot of us really happy. And one thing we should be on guard for, though, that I've noticed is that, the Fed is, they're people of power, and they've been making statements in the news saying that, that they're still going to continue hikes and they want to do this and whatsoever. They're talking tough. And the markets have been kind of ignoring them. So that's a little worrisome, just my own personal opinion. When you're dealing with people of power and they're saying stuff and you continue to ignore them, sometimes they do stupid things. And like we talked about before, they need to be, they're lagging behind on their decisions. They're always making decisions based by looking in the rearview mirror. So based on previous information. So, even if we know on the ground that inflation's coming down and we see that jobs are being lost across the country, they're still looking at some of these lagging indicators. And it just worries me that, the more the markets ignore them, the more they might do something to surprise the markets. The next important dates to look at is coming up on, I believe, December 27th, we have PCE inflation data. So that's something to look forward to. If that continues to come down like we expect, that should be helpful for the bond markets and therefore mortgage rates. And then on February 1st, the Fed has their next meeting. And right now the markets are pricing in that to be about a 0.25% increase. That's what we should expect. Bad would be if they went up to 0.5%. That shouldn't happen unless crazy stuff happens between now and then. And a crazy rally would happen if they don't raise at all. So fully expect them to go up 1/4 of a point. And then after that, maybe in March, maybe we don't have another increase. Maybe at that point when they pull the plug on the increases and we just don't do increases. I don't expect a decrease anytime soon, but just stopping the increases would be positive. So if anybody needs anything at all, please do not hesitate to reach out. But other than that, I hope everybody has a great week, and let's hope that this rally continues. And maybe next week when we talk, I can talk to you about something with a 5 in front of it. Have a great day, everybody.